National Australia Bank reports a sharp drop in profit. The boss of Woolies warns of tough times ahead for supermarkets, and how Starbucks is suffering from the shift to instant coffee. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Friday, the 3rd of May, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. I'm laughing. I actually winced when you talked about instant coffee.
Are you a bit of a coffee snob?
Oh, totally.
Yeah, I know.
You are too. You are too, though.
Yeah, I know, but if I have a chance to kind of frame you in a worse light,
right,
then I'll do that. It is a good story, though. We'll get to that one a little bit later on. Speaking of good stories, got a great interview coming up with Steve Huey, who is the founder of I Fly Flat. It's coming up after the show. Great chat.
It is. Now, I love the name, I Fly Flat. He's also known as, well, what is he known as? The
Points Whisperer.
The Points Whisperer. Yes. He knows everything about loyalty points, particularly around the airlines. And we're talking to him about Qantas and their new frequent flyer program, how to get the best out of it. Well, how firstly to collect points, then how to use those points to get the best value on flights. And it's really fascinating. Very happy to say, Michael, that recently I spent some points in the least optimal manner, according to Steve.
My favourite part of this interview is that moment when you found out that you had done the wrong thing.
Yeah.
He identifies this as the worst way to do it, and just the look on your face, just going, oh no. Anyway, it is a great chat, and Steve does a lot of work with businesses on how to kind of use points more effectively to kind of get business class flights, all that kind of thing. It's a great conversation coming up after the show. The main story, though, this morning, Sean, National Australia Bank has announced a 13% drop in cash profit to $3.6 billion for the 6 months to the end of March, but its business banking arm is booming.
National Australia Bank is the country's second largest bank, and the current half couldn't match the stellar 6 months of late 2022 and early 2023. That's when interest rates were rising. But that didn't stop the Melbourne-based bank from keeping the dividend steady and announcing a $1.5 billion share buyback. The result wasn't as good as expected, but still NAB's share price ended the day 1.4% higher. The reason? The strong performance of its business banking operations. National Australia Bank is the country's largest business bank. Business credit was up an amazing 9% over the past year, and the pipeline for loans is the strongest on record. The situation in the mortgage market isn't so positive, at least for NAB. The rise in the number of loans sold through brokers rather than directly through branches is hurting profitability. In fact, about 2/3 of NAB's loans, mortgage loans, now come from a broker. But Chief Executive Officer Andrew Irvine, fresh in the job, said there are signs that lean times in mortgages are bottoming out. Mr. Irvine called it a good result in a difficult environment and said many Australians are doing it tough, while most are doing okay. But that doesn't mean they're enjoying themselves. In terms of some of the details, net interest margins, the difference between what the bank pays on deposits and receives on loans, fell 5 basis points to 1.72%. NAB also lifted its provisioning for bad debts, though overall that remains pretty low.
Sean, you know how I like to see myself as the man of the people.
Yes.
I'm thinking now of perhaps new listeners to the podcast who might not have heard some of the terminology here. And when we talk about a $1.5 billion share buyback, what does that actually mean? What's that involve, and what's the purpose behind that?
So the value of National Australia Bank is about $106 billion. So there's $106 billion worth of shares out there. Our super funds hold a lot of those. Sometimes we just own them personally, that sort of thing. $106 billion out there. National Australia Bank is going to buy 1.5 billion of that 106 billion. So what's that, about 1.4% of all the shares out there? And then they cancel them. The reason they do it is that they've got a lot of cash and they're wondering what to do with that money. They've got $1.5 billion. Am I going to buy another business? And am I going to invest it in technology? No, actually, I'm going to buy the shares back. And theoretically, what it does means there's fewer shares on issue and the profit's the same. So the value of each share actually rises. So it's kind of a capital management tool that companies do pretty regularly. That's what a share buyback's all about.
That's a fantastic off-the-cuff explanation there. And you know what my favourite part of that was? How quickly you figured out that was about 1.4%. It was just maths on the fly.
That could be, well, it's 1.5 over 106. It's not that hard.
Oh, speak for yourself, Sean.
Right.
Wow. Look, I'm very impressed at all of it. Maths on the fly, explanations, everything. Now, back to the story. It's always interesting, isn't it, to hear the big bank kind of CEOs talking about the economy more broadly, the different kind of forces at play. What did Andrew Irvine have to say?
Yeah, I agree with that because the banks know what's going on. They have their finger on the pulse of the economy, kind of literally. Well, I don't really think a bank has a finger, but, they know exactly what's going on in real time. Mr. Irvine said there are still large sectors of the economy doing really well. And in fact, he complained about there being an overemphasis on the difficulties in the economy and those that are struggling, and an underemphasis on parts of the economy that are doing well. I think he blamed the media on that one. He might have a point. The amount of business lending in the pipeline is a very positive sign for the economy. In fact, Mr. Irvine, who actually came from that business side of the National Australia Bank when he took over a couple of months ago, he called the business lending pipeline astonishing and proof that the economy is holding up pretty well. He said mining and minerals, agribusiness, healthcare, defence and some manufacturing are doing well. Overall, Michael, I'd say a pretty decent result, and one that helped all the bank's share prices yesterday.
Okay, speaking of share prices, how did local markets overall perform yesterday?
The S&P ASX 200 closed up 0.2% yesterday to 7,587 points after a pretty decent lead-in from Wall Street. The market jumped sharply on opening and then spent the day falling back, particularly in the last few minutes where it lost quite a few points. The banks were the standouts, thanks to that National Australia Bank result. Macquarie Group was up more than 1% ahead of its results today. Coles was lower, Woolies tumbled. More on that shortly. WiseTech Global rebounded from Wednesday's fall, and Telstra and Woodside both fell more than 1%. Namoi Cotton is kind of been interesting this week. It's been the subject of a bidding war, and its share price jumped 13% yesterday to 72 cents a share after Singapore-listed Olam Group said it's willing to pay 70 cents a share so long as it gets 90% of the company. Now, on Monday, French agribusiness giant Louis Dreyfus, it came out and offered 60 cents a share for Namoi Cotton. The company's share price is actually up 50% since mid-March. Would have been good to know about that back then, but there's a bidding war on there. And also interesting, shares in Afterpay owner Block fell 6% after reports in the US that federal prosecutors are stepping up their investigation into the business. NBC reported allegations that Block processed multiple cryptocurrency transactions for terrorist groups and failed to properly identify Square and Cash App customers. Square and Cash App are both parts of the Block empire. There's also other allegations about compliance failings, all allegations at the moment, but it's not helping the share price of Block.
All right, checking international markets now, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. And what's Jerome Powell had to say?
Jerome Powell, of course, is the US Federal Reserve Chair. I like the fact that you just jump into Jerome Powell, assuming everyone knows who he is now because you're so familiar with him.
Oh, I call him JP, really.
So JP said what? JP said what many investors wanted to hear yesterday morning, and I quote, "It's unlikely that the next policy rate move will be a hike." It followed the Fed's board meeting where they left the benchmark rate unchanged and didn't really seem overly concerned about recent data points that show inflation still bubbling along in the world's largest economy. The comments helped equity markets, also gave the Aussie dollar a boost. In the short term, moves in interest rates matter to currency, so if investors think rates in the US are going down, they're more likely to put money somewhere else, like Australia. Now, that's a total oversimplification, but you get the gist, I'm sure. Bitcoin, well, it's been falling, and that continues with the cryptocurrency now trading close to $57,000 a unit. Remember, in March, you hit a record of $74,000 a unit, so it's quite a come down. In the commodity markets, Brent crude is trading just under $84 a barrel. Its recent decline reflects hopes for ceasefire talks in the Middle East. Gold's also come off. It's trading around $23.20 an ounce. Iron ore's had a bit of a run. It's back up to $117 a ton. Now, just a few weeks back, it was trading at $100 a ton. That, of course, is good news for local iron ore miners. Also, the federal government's balance sheet.
Goodness me, there's a bit going on.
There is. There always is, though.
Oh, okay. I try and put these things out there, and you just shoot me down a bit today.
Sorry.
No, that's okay.
A blocker.
No, that's okay.
I apologise.
No, that's fine. That's fine. Just getting a little bit narky to start the show today, Sean. Look, we'll take a quick break. We'll be back in a moment with the rest of the day's business news and hopefully a slightly better mood.
I hope your attitude improves over the break.
Unlikely. Sean, supermarkets are going to find the next 12 months tough as rising rents, energy and insurance bills and little prospect of interest rate relief eat into consumers' pay packets.
And that could mean they cut spending at supermarkets, according to outgoing Woolies Chief Executive Officer Brad Banducci. The comments didn't help Woolies' share price, which ended down 4% yesterday. Sales for the 3 months to the end of March grew by 1.5%, well behind rival Coles. The Australian food business at Woolies was up 1.1% on a comparable store basis, while the Big W merchandise business fell more than 4%. Clothing and homes were the segments most under pressure there. Mr. Banducci, who leaves the job later this year, said shoppers were coming in more frequently to stores to buy items on promotion, but the amount they're spending on each trip is actually dropping. Another thing he said, which is close to your heart, 12 months ago, Woolies had a great collectibles promo going on, those little things that you pick up when you spend $30 and stuff like that.
Mm-hmm.
And they haven't had it this year, whereas Coles, it is in the midst of a promo offer with those collectibles, and they're doing better. So your story a couple of days ago to me that your family actually swaps between Coles and Woolies based on collectibles.
Mm-hmm. Clearly,
you are not the only family that does that.
No, I would dare say I'm in fact a trendsetter.
Yes.
I'm both a bellwether family and a trend-setting family.
A trendy bellwether.
There we go. Never thought I'd describe myself that way. Now, Rio Tinto held its annual general meeting yesterday in Brisbane, and the board and management weren't saying anything about whether the WA-based miner was interested in having a tilt at Anglo American.
There's plenty of speculation since BHP bid for Anglo, it was rejected of course, that other buyers will come out of the woodwork. The two most often mentioned are UK-based Glencore and Rio Tinto. Rio's overly reliant on iron ore and its assets are relatively old, so their life isn't great. So the miner needs to do something. Anglo, according to analysts, would be a very good fit. Now, Chair of Rio, Dominic Barton, was asked directly about Anglo. He said he won't speculate or comment on M&A activity. That is a pretty straight answer. Doesn't tell us anything, though. Otherwise, he said Rio will increase production at its underground copper mine in the Gobi Desert in Mongolia. I found out a little bit about this copper mine. It's supposed to be one of the biggest copper reserves in the world. The mine's 1.3 kilometres below the surface, in itself phenomenal. It's connected by around 200 kilometres of tunnels. Rio actually spent $15 billion on the site. Production's now ramping up, but 200 kilometres of tunnels.
That is incredible.
It's actually hard to get your head around. So the size of the deposit is about the size of Manhattan. So if you get an idea of it.
That is, the scale of that is huge.
Yeah, $15 billion to get it up and running.
That is amazing. Great story. Now, not such a great story yesterday for Autobarn owner Bapcor. You'd probably describe it as a horror day yesterday. Its share price tumbled 25% after it downgraded its profit guidance.
In fact, it's been a horror week because remember on Monday, the incoming chief executive officer quit 2 days before he actually started. And the chair at the time described it as disappointing. That's an understatement. Now the company has said annual profit will be down as much as $32 million from last year, triggering the massive sell-off. Conditions in the retail business were suffering from weak consumer confidence and lower levels of discretionary spending. Bapcor said the company's wholesale business was being impacted by competitive pricing and the company's better-than-before cost-out program. It's not so much better than before anymore. It's not performing as well as hoped. Interest rate costs are actually even higher. There's also a possible goodwill and asset write-down in the offing as a result of the underperformance. all around, a really bad day for the company.
Yeah, sure was. Now, Australia's trade surplus has come in at $5 billion for March. That is the lowest surplus since 2020.
It's always good to be in surplus, and because we sell so many commodities, Australia is generally in surplus. But a surge in imports, which hit a new record high of just under $40 billion for the month of March, has narrowed the difference between exports and imports, according to the Bureau of Statistics. Meanwhile, the news in the construction sector has picked up marginally. The total number of dwellings approved in March rose nearly 2% after a near 1% fall in February, according to the Bureau. Approvals for private houses rose 3.8%. The average approval value for a new house in March was just a touch under $469,000, up about 4% over the year.
And finally, before we get to international news, cybercrime detectives were moving to urgently remove the website that allegedly published the personal information of patrons who signed in at Clubs New South Wales premises using their driver's licenses.
Plenty of clubs and pubs in that state have been affected by this. New South Wales Police's cybercrime squad said it was alerted to the website on Wednesday and was investigating how the data breach occurred and which, if any, criminal offences were connected to such a breach. Media is reporting that a group of software developers in the Philippines holds the personal data of many thousands of New South Wales club visitors. The website shows names of patrons, the club they attended, their birth year, suburb address, but does censor a bunch of other details. Meanwhile, Heron Todd White appears to be the victim of a ransomware attack with a group called Black Suit, claiming on the dark web to have a list of documents of great value in its possession about the privately owned property valuation firm.
Okay, turning to international news now, and Solomon Islands Foreign Minister Jeremiah Manele will become the nation's new Prime Minister, reinforcing China's influence in the Pacific country.
Current Prime Minister Manasseh Sagavare stepped down of his own volition, and Mr Manele won a ballot of MPs. He said the Solomon Islands would need a more focused and aggressive approach. Mr Manele's election as Prime Minister is likely to be well received in China, as it offers the prospect of continuity in the Pacific nation's foreign policy, according to Bloomberg. The good news for Australia is that the new PM is not the old PM. Mr Sagavare wasn't a big fan of Australia, and Mr Manele is likely to be more receptive to the Albanese government. Our Prime Minister, Anthony Albanese, congratulated Mr Manele on his win and said he was looking forward to working together.
Finally, Sean, the coffee world is changing. As the cost of living bites, Starbucks has reported a fall in coffee sales, while turnover of Nestlé's instant brew is surging.
Oh, I don't like this story. So the inference in what you just said, Michael, is that Starbucks is a premium coffee and Nestlé isn't.
Oh.
Now, that might be true, depending on who you ask.
I suppose just as a straight-up comparison, I suppose.
Right.
It probably is. But
So this story comes from Roger Montgomery from Montgomery Investment Management, good friend of ours. He likes to keep an eye on all sorts of US stocks. Starbucks reported its third quarter earnings. Its share price is down 26% since November last year. It has well and truly underperformed the S&P 500 by about 45%. What's happened in this last quarter, there's been a 7% drop in US sales, a 4% drop in China. The actual amount of money each individual spends on average has fallen as well. Really bad news for Starbucks. Compare that to Nestlé. Its reported sales of instant coffee growing at twice the speed of the overall coffee category itself. Looks like the 50-cent coffee is winning out over the $5 coffee because of the cost of living, irrespective of taste, I hasten to add, Michael.
See, there's a third category, though. There's the kind of make it yourself, but a more premium, using premium beans. And I think that actually kind of fits into somewhere in the middle and would end up being about kind of $2 a cup, for instance.
But Michael, that's assuming you got the $300 or $400 to buy the machine to begin with. Or maybe it's $600 or $700.
Yes, this is a good point.
See, clearly we know who's got one of those.
Yes, well, yes, okay. All right, well, let's move on quickly then, Sean, before we kind of get ourselves into trouble here. Up next is the Fear and Greed Daily Interview. You're speaking with Steve Huey, founder of I Fly Flat.
Yes, all about the best way to earn frequent flyer points and the best way to spend them.
It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 3rd of May, 2024. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, X, TikTok, and Facebook, and head along to fearandgreed.com.au and sign up for our weekly newsletter. The next one comes out next week, so you've got plenty of time. I'm Michael Thompson, and that was Fear and Greed. Have a great day.